Now let's take a look at the bigger picture. Don Nesbitt, Senior Portfolio Manager, FM Investments, is with me now. Look, we've already had some back and forth action now. People are watching the VIX very closely. We hit records yesterday. We hit records today. In fact, yesterday was the 30th record close for the S&P. What do you say is the catalyst, and does it continue? Can it continue?
Well, sure. The prospects for lower rates help stocks. Also, we just had a great second quarter earnings season. I think the estimates at the beginning of the quarter were something for like a 5% year-over-year growth, and it ended up almost twice that. So between that, also with the tariff fears starting to subside a little bit, and the thoughts of the positive aspects from the big beautiful bill, which was recently passed, should be starting to work their way through. That all bodes well for stronger earnings and better stock prices.
Yeah, a lot of folks really think that there is still a lot of cash on the sidelines. The earnings fundamentals were looking pretty good. They're with the lower rate environment, a friendlier administration for business, there were a lot of catalysts at the same time. How's the economy? We have a shutdown right now. People are still worried about the labor picture, which had been slowing. And inflation, I mean, how do you think the economy is?
Yeah. Well, the shutdown in the economy is always or the government is always of concern. Although in the past, it really hasn't affected the equity markets and investors. I will say, though, that the last time we did this with Trump, I think it was closed for something like 35 days. That was the longest on record. So he is always a wild card here. Otherwise, the hope is that the two parties can come to some kind of agreement relatively soon. Labor market softening, but still not a major concern.
We do have a Senate vote that is underway. It started about the short-term spending bills coming up. We'll see what comes of that. But as of right now, I'm not really seeing much changes pertaining to the shutdown. Let's go over some of your stock picks today. Where does Levi Strauss fit into the picture here? It's at 24 and change today and has been on an upward trajectory, in fact, hitting a new high, 52-week high this week. Your thoughts?
Sure. Well, first of all, we've added these stocks to our value dividend strategy. And one of the things we look for are what we call bargain stocks. These are neglected stocks that we see turning around, represent attractive fundamental valuation. So Levi's fit that bill. We added it last quarter. The interesting thing about them is when we went through quarterly earnings, those stocks that could not address the tariff situation were punished. Levi's did a very good job of talking about how they've diversified their operations. They've worked with their product lives and put more focus in those lines. And they've been able to weather the tariff increases so far.
And then what about a name like Valero Energy? We're totally changing sectors and topics. Levi's managed to get around tariffs. What is Valero doing right?
Sure, and that's all what diversification is about, right? Changing sectors. So in the energy sectors, obviously, oil has been down. It's hurt the energy sector and the fossil fuels in general. But the Valero is a downstream refinery, so they're less affected by the crude prices and more concerned with the crack spread, which the crack spread was favorable for them in the second quarter, and we expect that to help their earnings. Reporting for the third too. Also, they're benefiting from long-term supply constraints. They're recently announced that they've got to close a refinery in California due to regulatory and excessive costs. This is what's going on with the industry. It cuts supply. It puts them in a better position in the future for their earnings.
So, all right, and then we go to UnitedHealth. What's interesting about UnitedHealth, it's been up for 5 days in a row. And, that's the longest winning streak since last November, 2024. Nice catalyst there, nice momentum. How much room to the upside does this name have? It's at 358 today.
Yeah, I think it's had a pretty good run. It's a contrarian story. Again, a stock that was knocked down because of a lot of the federal investigations around it in April, May. Analysts in the streets have become a little bit more accepting of their situation, and they recently were able to get confirmed in the CMS STAR program, where it looks like they're going to be able to retain a lot of their 4-star plus status there. That bodes well for their revenues and profits going forward.
What do you think about the market overall? I mean, do you expect that we should prepare for a sell-off? And if there is a sell-off, we buy or not necessarily? I mean, you have your picks. It sounds like you've been optimistic.
Yeah, it's expensive, no doubt about it. But high valuations don't necessarily mean that they can't go further. And this is where the focus becomes on earnings. I don't believe that further interest rate cuts are going to be able to help the market advance, especially when you're at a 22 times multiplier. Those rates can't drive that PE multiple much higher, but earnings can come into play. And that's why third quarter earnings in particular, after a great second quarter earnings season, is going to be very important. So if these numbers can come through, and I think they're looking for about a 7% year over year growth rate in earnings, and that could at least maintain. And of course, there's a story of broadening out in terms of the leadership of this market. We're starting to see some of that, away from the top 10 or Magnificent Seven and into some of the other companies.
How do you feel the Fed will move? What kind of moves should we expect from Federal Open Market Committee in the next couple of meetings?
Yeah. They're not in a position I don't see, with the economy strong and inflation being relatively tame, but of a concern here, because one of the things that's happened with the tariffs is the effects of those tariffs have been slow in coming. Everybody was looking for the inflation. Perhaps we've mitigated some of those type of things with things like a weaker dollar that offset so that the exporters outside the U.S. could take some of those tariff hits. We'll see. Obviously, the Fed has shifted away from inflation and on the labor market. And then one of the other things that we're seeing out there in order to fight these tariffs are that companies are starting to let people go.
Yeah. Don Nesbitt, Senior Portfolio Manager, FM Investments. Good to see you, Don.